I often get asked the question along the lines of the daily time frame is shorting, the weekly time frame is longing. What should I do? I'm confused. So something along those lines, and I'm going to show you in this video how you know which time frame to prioritize when you're looking at a particular asset. So initially, just starting out, you're going to be trying to decide the directional bias of the asset that you're trading, so what direction to focus on, and then nesting your entries inside that bias. And this ties up with the Market Cipher B cheat sheet that we have in the Discord under the announcement section, guys. So the directional bias for any chart that you're going to be on, it's going to be controlled by the time frame where the blue wave is crossing zero, the highest time frame that's currently doing that, and then the highest time frame that is anchored or crossing down on anchor. And from there, you know where the push and pull of the market is going using the Market Cipher B cheat sheet with this. All right. So I'm on AUD USD because it's the cleanest example for me to show you in the last 3 or 4 weeks. It's very, very clear. I'm going to be starting over here where the 4-hour wave was crossing up on zero. You would say that you would be starting to look for long positions, okay? And I'm going to show you what the other time frames look like. You can see that the daily is not crossing zero, but it's not anchored either. And the same with the weekly. It's not crossing zero, but it's not anchored either. And the same with the monthly. Not crossing zero, but not anchored either. You tie this into the Market Cipher B cheat sheet with your take profit 1 and your take profit 2 for a 4-hour reversal. A 4-hour is changing the daily's trend, the daily time frame trend at this point. So the daily from this point onwards, let's just go to the daily and I'll show you. From that point onwards, you're getting a bullish engulfing candle in the daily that is highly likely going to lead to consecutive trending candles. So the take profit time frame for a D15 entry would be the 4-hour wave heading plus 60, the 4-hour wave anchoring. Okay, and that's how you would nest the cheat sheet into something like this. But then just to go to the second point, the highest time frame that is currently anchored to break anchor is also going to then control things. So the 4-hour crossing zero was controlling the push and pull of where things were going. Then the 4-hour anchored plus 60, it was overbought. And then the 4-hour breaking down also controlled the push and the pull of everything. A 4-hour breaking down on plus 60 sends the 1-hour time frame usually to negative 60, which it did. And in this case, that would be a relong entry. So there you go. And then eventually, I'm just going to go back to the daily time frame. The daily wave eventually then was crossing up on zero. So now it's your daily wave that is becoming the point that is controlling the market. And initially, the highest time frame that was still anchoring was the 4-hour. Again, when the 4-hour breaks anchor, it sends the 1-hour to negative 60. But there would come a time when the highest time frame that was anchored to break anchor became the daily time frame. Okay, so then when the daily wave is breaking down on anchor, we know from the Market Cipher B cheat sheet that the 4-hour wave is highly likely to go to negative 60. And eventually there will come a time where the weekly is crossing up, and all the time you're getting the fractal pushing into these higher time frames. You're looking at continuations for those higher time frames. Now you're in weekly 1-hour long continuations, and the take profit is the daily wave hitting plus 60. So currently we are in a position, the equivalent trade on Euro USD, where we are expecting the daily wave again to go to plus 60 because we are following the W, which is controlling the directional bias at the moment, because it's the highest time frame of the time frames that we use that has crossed up on zero. So we are expecting weekly 1-hour long continuations, and that means the take profit point for a weekly 1-hour long continuation is a daily wave anchoring. So once the daily wave or the 4-hour wave, they're both heading to anchor, they both haven't hit yet, but one of them eventually will, then that will be also a control point for the directional bias. So we're currently in a long position on EU, which looks pretty much similar to AU at the moment anyhow. Once we get this anchoring on the daily, the 4-hour will also be anchored. So it's your highest time frame, okay? Highest time frame, which is then the daily. We are going to be probably catching a short when the daily is breaking back down on anchor. It's highly likely going to send the 4-hour wave to -60. And then when that happens, we're probably going to catch the re-long, because at that stage, perhaps the monthly wave is crossing up on 0 and the fractal keeps pushing up and up and up. So that's how you prioritize which time frame to look at in the fractal. It's just knowing where you're heading, like how much space you have between points. If it's very low time frames like the 1 hour and the 4 hour that's currently crossing 0, you might only have this much space. But if it's a weekly time frame that's crossing 0, then wow, well, I've got this much space to go, and I can catch pullbacks and relongs, inside of that. I can short the market and I can, long, scalp short, swing long. So knowing the push and the pull of these control points will help you to prioritize what type of positions you're getting into, whether it's scalping or swinging against the trend and with the trend, knowing the space that you have to take profit as well. And if you are also considering whether or not an asset is even worth trading, because you're going to get some assets where they are anchored or crossing 0 on such high time frames, it's really going to be very difficult to wait for any break or reversals on those sorts of assets. So I'll just show you JPY at the moment. You can see, let me just delete everything here. On the 3 months, you're currently anchored. And when you're anchored like that, you can see from the point of it crossing +60, the overbought level, it has just been trending long this whole time. So I think it's even on the 6 month, and probably you can't even see it, but probably on the 12 month, it's also going in there. So it's such a high time frame that is controlling the anchor break. At that point, if we come down now, we can see that you've got other opportunities nested inside of that time frame. So we would probably only be looking at the monthly and then down from the monthly. So when I say the highest time frame, we're probably stopping at the monthly, because you can get decent swings and scalps from the monthly down, monthly W, and then daily 4 hour, 1 hour, and then 15 minute. So if this weekly wave is going to be breaking down, perhaps the daily wave is going to short to -60. I know that the monthly is also looking like it's anchored, so it'd be interesting if this just breaks back on itself now. You can see how it becomes difficult when trying to assess the control points in the market of what time frames to look at. We haven't been trading JPY because of this, and Bitcoin would be another example where I think it's anchored on the monthly quite deeply. So you probably have to drop down to a lot lower time frames to try and catch smaller movements, because those higher time frames, when they're anchoring or crossing 0, they are going to determine the directional bias for the asset that you're trading. So I hope that answers the question, guys, of what time frame to prioritize or how to sift through assets that are tradable versus not tradable when you're looking at those control points of the wave crossing 0 or going into the overbought or the oversold level. If you have got any other questions for me, just leave a comment. Thanks, guys.